Welcome back, investors, to Ticker Time News. I'm Adam, and today we're talking about SoFi, ticker symbol SOFI. SoFi just completed its merger and raised about $2.4 billion in cash proceeds from the transaction. This will enable the company to expand geographically and build the first one-stop digital shop for members to save, borrow, spend, invest, and protect their money. SoFi also just released its Q1 2021 earnings that beat both the street's EPS and revenue expectations. This was SoFi's first quarterly earnings report as a publicly traded company. Members grew 110% year over year to 2.28 billion. New users were driven to SoFi mainly through SoFi Invest, which gives users access to investing in the stock market. The pandemic really helped set up the retail trading boom SoFi and other investing apps like Robinhood have seen, and has been a massive tailwind for these companies. I would expect this growth to continue for the foreseeable future, as more younger investors, especially millennials, explore SoFi's features and venture into the market for the first time through SoFi. They should be plugged into a wider multi-product ecosystem that radically ramps up SoFi's revenues. The company is now well on track for over $1 billion in revenue for 2021. Now, the bearish case for the company has focused on the spotty results it sees in the initial Q1 surge, which was driven by retail investors fleeing from Robinhood during the GameStop debacle. This effect was further compounded with the ascent in a broader basket of cryptocurrencies, from Bitcoin to Ethereum, pulling in even more retail traders to platforms like SoFi. Will these investors stick around? If no, we should see a softening of revenue in the quarters ahead. SoFi has guided Q2 2021 revenue of at least $215 million, a 58% growth from the same quarter a year ago. SoFi's lending segment accounted for 78% of total revenue realized during the quarter and was up 107% from the same quarter a year ago. The technology platform, which houses Galileo, was 21% of total revenue and was up a whopping 4,513% during the quarter to $46 million, up from just $1 million the same quarter last year. The contribution from Galileo as a percent of total revenue is expected to grow significantly in the quarters ahead. With a share price just above $20 and a market cap about $18 billion, this would place forward one-year price to revenue multiple at around 17x. While bears might state that this is a rich valuation for a fintech company, SoFi still stands to benefit from a number of new product offerings and catalysts that should boost both revenue growth and underlying profitability. This includes gaining approval for a full banking charter, auto loan refinancing, and I'll touch on that in a moment, and SoFi credit card, which allows members to earn a market-beating 2% unlimited cash back on all purchases when users engage in a related SoFi product. SoFi's strong first quarter results help build the momentum it requires to succeed in an increasingly competitive fintech marketplace. SoFi going public couldn't have come at a better stage in its growth journey. As a fully public company, SoFi should be able to build a strong institutional investor base to provide it access to the capital required to further build out its platform and for bolt-on acquisitions that complement its Galileo offering. With auto loan refinancing launched post Q1, the street will miss this giant opportunity. The company does face the difficult task of managing the growth expectations implied by its current price to revenue multiple. While I'll expect any pullback in trading volumes to be minimal because of SoFi's diversified revenue base, there might be a slowdown in new members if the market crashes or trading falls drastically. SoFi's growing consumer profile and expanded fintech muscle with Galileo, international expansion possibilities, and recent product launches still make the stock a long buy and hold for long-term investors. Now, let's talk about buying opportunities. We've seen a harsh 2-day sell-off at the end of last week, with a brief dip below the 10-day moving average. We need to watch on Monday to see if the stock can bounce from the 10-day moving average. If it can't, it puts the 21-week, 10-week, and even the 21-day moving average in play. That may be a decent buying opportunity. In simple terms, anything under $20 is a good long-term buy for SoFi. Do you own SoFi? If not, what fintech companies are on your radar? And as always, if you've watched till the end, you, my friend, are totally awesome. Thank you so very much for watching, and I'll see you in the next video. You can help out the channel and earn free money while doing it. First, earn $10 worth of Bitcoin by signing up for a BlockFi interest account and depositing $100. Plus, the added benefit to using BlockFi is that you will earn interest of up to 8.6% annually on your cryptocurrency. Second, earn 2 free stocks worth up to $1,850 by signing up to Webull and depositing $100. Click the links below to get started.